Hey, come here. Come closer. Come here. I want to tell you something. Come here. Come closer. Closer. Oh, not that close. So check it out. Nexstar Media Group, ticker NXST, raised their dividend 25%, and they've raised it 25% every year for the past 10 years because they're a free cash flow machine. And this increased our PADI, which is our projected annual dividend income, by $140.08. In January, we also received dividend increases from Enterprise Products Partners, ticker EPD, which was their 25th straight annual raise, and this one was by 3%, and our PADI increased by $6. And lastly, a position that we have not added to since the summer of 2020, which is Energy Transfer, ticker ET, who raised their dividend by 0.8%, which is their 9th straight quarterly increase, although it is still below their pre-pandemic level, and our PADI from that jumped a whopping 31 cents. So that's a total of $146.31 of dividend increase for the month of January. And what's crack-a-lackin'? I'm Russ, and I am a passionate passive income investor who also happens to be a welder, sharing what we're doing. And if you would like to see what's in our portfolio, you can always click the link in the description below and go to getquin.com, where we also have an affiliate link below if you'd like to sign up. And you can also always keep tabs on our portfolio activity in the free and fantabulous weekly newsletter, linked in the description below. And as of this morning, newsflash, we also started to finally unwind our AT&T position, ticker T, of which we had about 440 shares, and we decided to sell off 94 of them, which were all the shares we had with a cost basis under $18. So it took a while for me to learn this, but the telecom business, which both AT&T and Verizon are in, is highly competitive, and it is very capital intensive, which means that AT&T and Verizon always seem to be chasing the shifting demands of the consumer and the new and innovative technologies that seem to pop up every few years. So paying a dividend on top of all of this makes it seem that it's really hard to grow their business. And yeah, it didn't help that AT&T and Verizon both got the bright ideas to become ginormous media and telecom conglomerates. But I want to point out something really interesting that some of you may not be aware of. On a total return basis over the past 10 years, T has a total return of 32%, Verizon, ticker VZ, a total return of 47%, and the non-dividend paying T-Mobile, ticker TMUS, has a total return of a whopping 439%. And even if we go way back to give a head start to AT&T and Verizon back in 1994, they still can't keep up. AT&T has a total return of 385%, Verizon 118%, and T-Mobile, which didn't start publicly trading until May of 2013, has a total return of 780%. I'd love to know in the comments below what you're doing with the major telecoms, and if you're enjoying this video, go ahead and tap the updoot for Mr. Algorithm. So all of the January dividends we received were PepsiCo paying us $126.50, Vici Properties paying us $48.97, Altria, ticker MO, came in at $156.80, Leggett & Platt, ticker LEG, $46, Main Street Capital, ticker MAIN, $36, Realty Income, ticker O, the monthly dividend company, paid us $41.30, and Innovative Industrial Properties, ticker IIPR, $18.20, for a grand total of $473.77 received in the month of January. So we talked about those 94 shares of AT&T that we sold at $18, and also 17 shares of Extra Space Storage, ticker EXR, at $158.50. Now, we had been sitting on those Extra Space Storage shares for a while. We're just trying to consolidate consolidate and clean up the portfolio a little bit. So we sold those shares because we received them during the merger of Extra Space Storage and Life Storage. We bought 6 tickers in the month of January. They were 11 shares of Vici Properties, ticker VICI, at $31.36 on average, 18 Realty Income shares at $56.68, 4 shares, new position of Diageo, ticker DEO, at $140.40, 21 shares of Toronto Dominion Bank, ticker TD, at $61.15, 1 little old lonely share of the Schwab US Dividend Equity ETF, ticker SCHD, at $76.35, and 2 shares of Harrow Incorporated, ticker HROW, at $9.69. As we come over to the portfolio here, our yield on cost went down just a little bit from some of the selling we've done. Current dividend yield 4.55%, but the yield on cost 5.11%. And we're down to 29 holdings. We're going to probably be selling off ACI. I'm hearing that the merger's likely not going to go through. We've been hanging on to these 11 shares, waiting for that arbitrage play to see if it happens, but it's such a small position, and I'd like to get down to at least 25 holdings. Let's sort this by percentage of portfolio, and we see that Nexstar Media is our number 1 position with 11.8. Remember, you can pause this. We're going to go quick if you want to zoom in and look at some of these numbers a little bit more, like the dividend growth streak all the way over here on the right. PepsiCo still hanging in there, 11% of the portfolio. Johnson & Johnson coming in next at 8.1. SCHD still building up at 187 shares, trying to get that to 200. We will eventually. TD want to hit 150. We're at 149 there. Ares Capital, 5% of the portfolio, 405 shares. Now Main Street Capital, waiting for that to go under $40 a share if it'll get there. Altria, always on waiting to sell that. Cost per share, $43.83. So we're really looking for a $44 share price on those before we do sell. Winding down T, still 4% of the portfolio. You guys know AbbVie? Hey, they're facing a little bit of a patent cliff, so that's one we'll keep an eye on. But still up 87% on those shares of AbbVie. Same thing with ExxonMobil, up 126%. Very nice on that. Lockheed Martin, just going to sit there. It's just a stalwart, and we're figuring out what we want to do on that. But yield on cost coming up on 4%. Vici, going to keep building that. We'll get to 200 shares someday. We do still like Prudential, McDonald's, but we haven't been adding much to either of those. Now, we did add Prudential when looked like we're going to have a financial collapse, version 2.0, which never came to pass. And we were getting those shares under $70. We added a few more. We have a total cost per share of $75.90. Very nice yield on cost of almost 7% on those. McDonald's, our cost per share, $176, and it's currently pushing $300. You know, it's a really great time when you have a market correction, a market crash, something crazy going on, and you can get these great businesses at steep discounts like we did with McDonald's. And unfortunately, we only scooped up a handful of shares. There you go. EPD, Leggett & Platt, we're thinking of selling them. I don't want to sell for a loss, so I think they're going to be okay. They're going to be able to make it through these headwinds that they got going on in the betting segment, but we will see. Starbucks, 25 shares. I'd like to add more under $90, but we did buy a share today at just under 93. Same thing with Chevron, just kind of sitting there hanging out. We bought it at $84 a share. That's our average. Duke Energy, would love to know from you guys what you think about the regulated utilities. Do you still hold them? That would be cool if you'd share that. Which is your favorite? You look at them as like my guy Mike, the dividend guy from up in Canada, calls them deluxe bonds. No, he calls them deluxe bonds. Hey, he's got an accent. I can't imagine what it's like to live in this world with an accent. Thankfully, I don't have an accent. Simon Property Group, LyondellBasell, those are just hanging there. Harrow Health, 105 shares. They don't pay a dividend. They changed their name from Harrow Health to Harrow Inc. I think they're going places. I'm a big fan of their CEO, Mark Baum. I think it is a little more risky, and maybe someday they pay a dividend, but hey, it's the growth. IIPR, you know, we used to have over 40 shares, and we sold off all the ones that were under $100. $100 average. Diageo, we just started and it's already run up. We just started a position in Diageo and it's already up 6%. I wish it would have just stayed below 140 while we're accumulating here, but that's the way it goes. And there you go. Energy Transfer, those 31 shares, cost per share $6.19, currently at $14.37. We have a yield on cost of 20.36%. I may just end up selling that and consolidating that into something like an EPD. We'll see if that comes to pass. Again, Warner Brothers Discovery, what did you do with your shares? Are you still holding them? I don't know if we'll ever get back to that $29.80 cost per share where we got them during the spinoff from AT&T, but such is life. Down 65%, probably not going to come back. Again, we talked about Albertsons. I may just pull the trigger and get rid of them. And we've got about $5,830 in cash just waiting. Hopefully going to deploy it during a market crash or correction. That's never going to seem to come. But either way, that's the portfolio. So that cash kind of built up after we exited Intel, starting to exit AT&T. We want 100 shares of Johnson & Johnson, but I would really like to get that back in the 140s. And I think the magic chart tells me it may take a few weeks, but it may test those low 150s once again. So our dividend patty, the projected annual dividend income, is going to be in flux for a while as we work our way through this method to the madness that we got cooking over here. And in the floating little box right up next to my head, I'll tell you in under 2 minutes why Nexstar Media Group was my #1 most bought stock of 2023. And if you do click that little box floating next to my head, I'll tell you all about it there.